IBM is an interesting company that's using its decades-long relationships with enterprises to transition its business to the new age. Instead of building out technology infrastructure for enterprises, it's shifting to a more AI business, a more software-centric, services-centric business. It worked really well as the company in the latest quarter, the software segment experienced a 10% increase and the company generated $2 billion from generative AI. So investors are asking if IBM stock is a buy. I'll answer that question in this video, looking at the company's several years history in revenue growth, in profit margins, in cash flow, in returns on investor capital. I'll also look at the company's valuations on a forward price to earnings basis, and I'll share with you my discounted cash flow valuation model for IBM stock. Let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So I mentioned that IBM's software segment experienced a 10% growth in the most recent quarter. But on a trailing 12-month basis, IBM's revenue is down significantly from the highs around 2015. The company formerly generated close to $90 billion in revenue. It's now down closer to $63 billion in revenue. One of the segments that's in decline is the consulting and infrastructure segment, which faced a decrease of 7.6% in the most recent quarter. The company's artificial intelligence initiatives have been growing very well, the $2 billion that I mentioned in the most recent quarter. IBM's management team is optimistic about its prospects in AI in helping enterprises implement artificial intelligence, and IBM is a trusted business, one that when a buyer goes to the boss and says, I chose IBM, they're not going to get blamed for choosing IBM for a certain business process or for a certain business need. They've established themselves as the trusted, safe source, which helps them secure sales over some of these newer companies that are up and coming that may not have established a reputation as strong as IBM has. And so that competitive advantage that IBM has built over decades still allows the company to make sales that otherwise might go to a newer, more innovative firm. IBM's cash flow from operations has also declined along with the revenue declines over the previous decade. In the most recent trailing 12-month period, they generated $13.5 billion in cash flow from operations. IBM, the free cash flow, they generated $12.7 billion in free cash flow for 2024. The management team is forecasting an increase in 2025 up to $13.5 billion. So while the cash flow is down from the previous decade, it's on the rise on the current trend. So that's working well for the business and investors. In fact, if you recall, after IBM's latest earnings release on January 29th, that's when they announced earnings. But on January 30th, the day after they announced their earnings results, the stock price soared by roughly 13% on the day following the earnings release. So the market has liked what IBM has delivered in the last quarter. The returns on investor capital are also down to 7.42%, again, going along the lines with that downward trend over the last decade, as the business has sort of intentionally shifted away from legacy businesses, divesting some categories, and shifting their attention to more of the software segment, to more of the AI segment that is in the growth trajectory or is experiencing significant tailwinds, whereas the consulting and infrastructure side of the business, that's actually in decline as businesses are investing more in the cloud and going away from building their own infrastructure, their technology infrastructure in-house. So my free cash flow valuation for IBM has the company trading at its intrinsic value per share is at $399 according to my calculations. and the current market price is $247. And because of this big difference between the intrinsic value and current market price, I also wanted to look at a couple of other scenarios. Right now, the company's beta is 0.71, which indicates that it's a less than average risk business. And I kind of talked about that, right? The safety of the business. And that's reflected in the beta. And that's reflected in the company's operations as well, where it commands a more of a safety type of choice when it goes into the market to make sales. And so I wanted to look at the company with the higher beta. So I adjusted it to 1.25, up from 0.71. And in that scenario, the price would be lower at $211 compared to the current market price of $247. But if I were to evaluate the company on an average risk basis with a beta of 1, the current intrinsic value would be $275 compared with the market price of $247, which would indicate that it's undervalued at the current market price. So in 2 out of the 3 scenarios I evaluated, IBM stock looks undervalued according to my discounted cash flow valuation model for IBM stock. By the way, channel members have a member exclusive video evaluating IBM stock, the discounted cash flow model. If you want access to that, you can join as a channel member. You can watch that video among dozens of other members only videos I have for channel members. So we looked at IBM's business on a discounted cash flow basis, but what about on a forward price to earnings basis? It's trading at 21.85, which is about the average stock in the S&P 500 trades at a forward PE between 20 and 23. And IBM being right in there, it's a fairly priced business according to that metric. So the DCF shows an undervalued business. The forward price to earnings shows a fairly valued business. And given how excellent IBM's business has been over previous decades and the reputation it's built as an enterprise provider, as a go-to enterprise service provider, I think it's reasonable to pay these prices for IBM stock. So I've had IBM stock rated as a buy for over a year now, and I'm reiterating that recommendation today on March 11th, stating that I still think IBM stock is a buy at current prices. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.